Well, let's talk about Aurobindo Pharma. Once again, a surprise as far as the street goes. Natrol US business, which is the OTC sports nutrition business that the company has, they have decided to actually gone ahead and sell that business. They are selling it to a few players based out of the US market. Now, when we talk about what they have done, so they have sold the Natrol business. It's about $158 million in terms of annual sales. As I told you earlier, it's the OTC sports nutrition business in the US market. This is a company which they had acquired back in 2014. About $120 million is what they had paid that time. So it's about 5 times in the last 2 to 3 years is what they have sold. It's a complete cash consideration that they are getting, which is $550 million. And when they actually sell this business by Jan 21, they have given in their release that they would be looking at to go ahead and close this transaction, which means that the transaction would get completed. Now, what does this do is basically removes the $156 million in terms of the number that they have in terms of sales, but at the same time it also gets in the cash of $550 million, and that is something which they would use to go ahead and reduce their debt. Back in March 2020 they reduced their debt, then in Q1 they reduced their debt quite drastically. They have not given any particular guidance, but since the acquisition is off the table, the big acquisition that they had planned earlier, they did not plan to raise further debt. They were generating free cash flow, which means that they would be looking in to get debt free. But after this transaction they have almost or nearly got debt free. In fact, they would be having some surplus post this particular transaction. 191 million is the number at the end of Q1, and 550 million is what they essentially get from this drug. So a marginal EPS downgrade would come in because of the sales miss, but at the same time, it becomes a debt free company. It becomes a company which is much more stable, or rather they can go ahead and raise debt in the future if and when they plan to acquire any particular business. But it's a decent sale that we are talking about. Now let's talk about the valuation of this sale. So 550 million is the number that they have got, and as I told you, 160 million is broadly the sales that the company does, which means around 3.75 3.65 times is what essentially the sales number or price to sales is what you would look at. You look at current Aurobindo Pharma's market cap and their sales, it trades itself at about 2 times or close to 2 times the sales that they have, which means that they have got better valuation versus what they were getting for themselves for this particular business. Now 10% is the sort of growth rate that you have seen into this particular company. Not that anybody was expecting it to sell, not that anybody was expecting any major growth to come in from this particular business or so, but the valuation seems to be on the higher end, or at the end, which is much higher than what was earlier anticipated or earlier priced in as far as some of these sales business are concerned. But as I told you, more important thing is by Jan 21 they will close this. They'll get the $550 million, and majority part of that is going to be used to pay back the debt, which essentially means that they would get close to debt free after this particular transaction is closed.